Good morning, traders. Today is Friday, the 24th of September. My name is Neville Hornsey, market and review trading. And today I'll be taking a look at the Australian dollar versus the US dollar. So first things first, going to take a look at the YouTrading.com Forex heat map. And you can see today that the bottom left-hand corner is red, top right corner is green. So for me, just visually, this is a risk-off day. I'm expecting to see the commodity pairs all red today, as there is a move into the Swiss franc and the yen and the US dollar. All right, going to the actual active trader platform, then we've got the sentiment indicator. So the Australian dollar shows that 71% of retail traders are actually bullish this pair. So that's generally when I start looking for a fade of their move. Generally the 8% of retail traders get it wrong. So it's a good contrarian indicator. And if we look to, say, the monthly chart, I'll just clear all this off. All right, so 2011, commodity boom, then we had a big sell-off. So big sell-off from 2011 all the way down to March 2020, which was the COVID crisis. Obviously took out the swing low here, but we basically swept those lows, got the liquidity that was down there from the top of this impulsive move, got the liquidity, and then rose up towards this level here at around 0.8. So the big figure, 0.8, and then we've got 0.6, so 2,000 pips. Right, so still in a bear trend, possibly just took out the liquidity, like I said. We need to get above this swing high for this bear trend to be reversed and become a bull trend. All right, weekly. Big impulsive move up from the 2020 lows, as I said. And then we've got this area balance here before the impulsive move up to the swing highs, where these guys here in 2018 are the last of the buyers. As they're buying, someone's selling, probably institutional sellers. So they switch those orders, and then that's when you get the big runoff here. There'd have been fundamental reasons for it, and the institutional traders would have used the sweep of this high here and this big impulsive green candle to sell into. So that was probably manufactured. So we know that there's sellers up there, and we know that here there's like impulsive move sideways and then impulsive move. So they accumulated some more orders here before the move up. So there's buyers here. They did get some traders to obviously sell as they bought. So the lowest of the red candle closes is, that's a 702646, 70246. This is that candle there. So this candle, the red candle, is the last of the sort of real sellers. And if we go to the right with that zone, you can see that in the middle of, just by the dots through the rectangle, you can see that this sort of climatic sell-off went into the middle of this range, top of these candles here, and then the buyers were still present and they took it higher. So potentially trying to get above this double top where there's going to be some liquidity, those sell orders here with other stops up there. So there's potentially some liquidity up there. Buyers are trying to get back up to test it. So on the weekly chart, two red candles here, and we're currently flat for the week. Right, on a daily chart, so this was the climatic sort of sell-off into there before the buyers step back in. Then we had, before that, we had like this distribution sort of channel here. This impulsive move got higher than that balance area into this little balance area here. So there's sellers here. Everything that was, all the business that was done there has been like run through. And now they've just pulled it back. So we're just retracing this impulsive move. So as it's a retracement, it goes to Fibonacci retracement, goes to the bottom to the top. And if you look right, 61.8% is kind of where these buyers stepped in. So what we need now is for the buyers to just obviously test a bit of this demand area here. So we had a drop, a base, a rally, and then we want to see buyers step back in. The high of this candle is 73152, and the high of this candle is 73160. So we've got a higher high. We just need this candle to sort of close today with a higher low. If this is a swing low here, then we've had an A, B, C, and we just need a D now. So if you go to the Fibonacci extension, go from the bottom to the top to here, you see the measured move would be the 0.759, which is basically 0.76. So I'm thinking around 0.76, if this is a swing high, swing low, but a higher low, then we need a higher high. Then I'm thinking 0.76 is where we're going to try and test. And if you look left with that in mind, that's how you get to this swing high here. So maybe the retail traders are right this time. Maybe we're going to see some buying action come in and we go all the way to 0.76. Right. So if we zoom into like more intraday, obviously we know that it's a bearish day for the Australian dollar and commodity pairs. We can see here that we've got 1, 2, 3, 4 times this level around 0.722 was tested. So there's going to be a lot of stops underneath there. And if we just duplicate that and then go to the swing high, you can see here that we're in this channel, broke out, and now we came down. Anybody that was looking to this little sort of correction here, this balance area here, to get long, like I did on this particular example, then they've now been sort of stopped out probably. We do have a double top here. So there's going to be some liquidity up there. So assuming that the retail traders are correct, we want to go to maybe where they're going to get in further. So we've got this move up to the double top. Currently, prices just come down to the 0.76 to the 61.8% retracement. There is a little area balance here, but it's in the middle of this range. So if I go to retracement tool and just say, so 50% of that balance area. So this is the range, then 50% is in the middle. So ideally, we want to see bulls definitely step in now. There is one last place where buyers could step in. So this is the bottom of the range. So I said 4 tests of this level. This is the lowest close. So that was like the last of the sellers to get trapped in, just going short before they rushed it higher in this impulsive move. So there's definitely buyers here. So if I turn that to green, so in terms of price action, if there was buyers here on the 23rd of September, which was yesterday, obviously, then there might be some more buyers there still. Like I said, the likelihood is that it's tested 4 times, there's going to be a lot of stops, potentially a lot of liquidity down there to sweep. We could get a big sort of spike down and then a push higher. So like I said, we're into this middle of this range, big sell-off just coming on now. What we want to see is this candle close in 15 minutes time, and then for a reversal of that move, you sort of see buyers come in, or we want to sort of see buyers step in. So we either want to see this level hold and go higher, or we want to see this one go here. Now, for the Australian dollar to go higher, we need the US dollar to come lower. And currently, the US dollar is going higher, so that's no good. We've also got more of a risk-off day, like I said. So equities are likely to come off. Australian dollar is obviously commodities, so a higher dollar, lower Australian dollar commodities come down. So copper, iron ore, things like that might be weakening. And that could be because of the sort of fundamentals that are going on in the world at the moment. So they've got Evergrande in China, big home builder, obviously use a lot of steel and commodities, but they're going bust. They've missed dollar payments to their bondholders. So they've got now 29 days, I believe it is, to pay that. They've got a bit of grace to pay that. Otherwise, the Chinese government sound like they're going to let that company go bust. So for all the retail traders that are long, you've kind of got now or the 0.723 level for the buyers to step in. Otherwise, for me, this larger sort of trend down is going to carry on. So yeah, we're testing this one level here. We've got one more level to go before these buyers just get absolutely run over. So yeah, fingers crossed that there's 71% of traders, is it 71%? 72% now of traders actually get a turn in the market here, and the US dollar comes down, the Aussie goes higher. Otherwise, yeah, you've got maybe the 0.723 level as your last sort of stand. Okay, if you have made any money this week, it's obviously Friday, go into the weekend happy, and then come back next week happier. And if you're in a losing trade, maybe don't hold it over the weekend, because anything could happen with this sort of fundamental sentiment sort of shift towards the risk off. All right, take care, and I'll speak to you next week.